Welcome to today's podcast. I'm thrilled to have our special guest joining us today, Graham Burns, who's had an illustrious career in the Hunte, co-founder of Hunte, one of the largest industrial developers in our region, and more recently, Alton Property. In addition to these roles, he's also the chairman of publicly listed EVZ Limited, which is in the international energy sector. So thanks very much for joining us today, Graham.
Thank you for the invitation, Brent.
Our pleasure. So, Graham, you spent the last 40 years developing up and down the eastern seaboard of Australia, but you've chosen the Hunte to primarily focus your business activities. And you've been involved with some pretty impressive estates. You've got the Thornton Industrial Estate, you've got the Beresfield Freeway Business Park, 60,000 square metres at Rutherford, Annambar, Dubbo. There's been plenty of activity going on. So I suppose a big part of why we're doing this is to promote investment in the Hunte. Why have you chosen the Hunte to primarily focus your business activities, and what do you think are some key features about the Hunte?
I guess the short answer is that I came here as an economic refugee in the late 1980s,
Okay.
right on the cusp of 1990, and I'd been honed, if you like, in the markets of Sydney. I'd done a lot of work in industrial and commercial there, as well as in Canberra and Melbourne, and to a lesser extent Brisbane. I like the Hunte as a place to live, and that's why my wife and I decided to come and live here. The placement back into development was a secondary consideration, but it was nevertheless something that I wanted to do.
Sure, great. And a little bit about your business philosophy. So can you tell us a little bit about your early days with Hunte Land, and what's about your business philosophy that's driven a lot of your success with developing property?
Well, I think a business is pretty simple. You have one or more products which you have to differentiate for your clients or your customers. The inference there very strongly is to know what your customer wants and who your customer is. And a lot of people don't spend enough time worrying about those very simple issues before they get onto the complex parts.
Yes, agreed. Yeah, very much so. And in terms of the Hunte, we could talk endlessly about the opportunities here, but is there anything in particular with the economic profile of the Hunte that you think attracts investment? Or, you've placed a lot of big bets in Newcastle as well, the Hunte. What do you think are some of the key selling features economically that we've got here?
I kind of saw the Hunte as being a yet-to-arrive version of the Gold Coast and hinterland area outside Brisbane. Vibrant, great sort of singular personality of the place itself, the beaches, the vineyards and so on, a great place to live. When I came here, the Hunte had an aggregate population of about 400,000. That's closer to 650,000 people now, and I think we're heading pretty quickly to 1 million. The nice thing about trying to run a bigger business in a small location is that you can keep track of it a lot better.
Yep.
And we all like competition, but really at the end of the day, you don't want too much of it.
Absolutely. And it's a real relationship place here too in Newcastle and Hunte, I feel. I think there's some really good people to work with, and there's obviously the availability of land we spoke about. You've got family in Sydney. I think the affordability factor is a huge plus here as well. You've got beaches, we talk about these new 15-minute cities. Well, we're still a 15 minutes. There's still plenty of places to go within 15 minutes of a lot of places here in Newcastle. So I think that's a major selling point. Talking of major projects, your Hunte Business Park is nearing completion. That's been a significant project in recent years. Can you tell us a little bit about the journey for that project and where it's up to?
Wow, sure. So the first stage is coming for completion. So it's probably going to be a multi-stage project. I think it'll probably run 10 to 12 years end to end, construction side. But it has a lot more in the trunk, if you like, in terms of the history. We acquired the land in a joint venture with Stevens Group, and the land had been rezoned under Part 3A, but it wasn't ready to develop. And like all Part 3A approvals, it was a minefield. It was an indication of what could be done, but it required a lot of things to be tidied up. And my team were just extraordinary in putting solutions together for those things.
Mm.
For example, we're right next to the end of the M1 freeway, or the end of the freeway as it is today.
Mm.
Traffic for New South Wales is executing the M1 to Raymond Terrace link, a nearly $3 billion expenditure. That'll be the last piece of the Sydney to Brisbane separated road. You'll be able to drive between the two pretty much without a traffic light. And when you have an expressway built right next to your property, it's a plus, but it also presents some challenges.
And the infrastructure piece is an important one. I'll come back to that in a minute. But just looking at the land that's been selling in that estate when you started, with what prices have done for industrial land, we've come a long way. What did you start off selling plots of land there for?
Yeah,
rate per metre?
That's a pretty good question. I think I'd like to say first that the industrial land market has always been undersupplied in Newcastle. It's just been a matter of degree of how much or how little that undersupply has been in play, because that's really driven the dynamics around price. And it's driven the behaviours, I think, of buyers, and it's also driven the way that we as a developer have to deal with releasing of stock. An industrial estate or a business park is actually a creation of culture. We set about creating a culture. So the price that people pay is not the whole story. You asked the question. So in simple terms, at Black Hill, I think the first sales there were around $200 to $300 a square metre. But we were really quite picky about how we went around that issue. We know from the past, for example, at Thornton, when we released that in 1995, 96 in the first stages, that we actually made a mistake. And we released land and sold to people who ended up not building on it for 10 to 15 years. And I think I spent more time explaining away why things weren't developed than why they were to other people who wanted to come along.
Yeah.
Because the perception was that it was a place that no one loved. There were vacant blocks of land. So at Black Hill, we've been careful to sell to people who we think can actually carry through and capitalise, put equity into their projects.
And we caught up last weekend talking about the various types of buyers that have been buying industrial land over the last few years, and maybe even compared to previous estates. Have you noticed any trends to the types of buyers that have come in? We've talked about obviously owner occupiers, turnkey buyers as well that need a full building solution, but also the developer, land banker, or the developer that needs to get units out of the ground. Have you noticed much in terms of the split of buyers or even interest that's coming through to the market as a bit, given the rise in rates, and I suppose the fact that office or other alternative classes have been maybe waning a little bit in recent years? Have you noticed more investors coming to the market in that space?
Complex question. I think at different phases of the development of any business park, there's a different group of people. And the overlay to that is, what are the macro conditions economically? And what's the availability of funding? What's the cost of funding? And what's the implied value for investments? So when we started the marketing program at Black Hill, I think I could probably say that the market was maybe 50% owner occupiers. It was probably 25% speculative land buyers, and it was probably 25% developer investors. And I'd like to talk about that group if I could.
Sure.
So I think one of the phenomenons of the last 10 years has been at a time when there's been real scarcity in quality industrial investments, a class that's been well sought. A lot of those ultimate investors have had to acquire skills or form themselves into partnerships with other people who have the skills to acquire land and then build out and then hold on to the investments when they're finished.
Yeah.
And they've done that to jump the queue.
Oh, that makes sense. And talking about some of the macro factors in the market at the moment, high construction costs impacting a lot of projects, not just industrial land, but also, office space. Pretty much every sector is touched by the persistence of higher construction costs, and it's affecting projects getting out of the ground. What are your observations with the construction industry at the moment? What are you seeing? You're basically developing office space, you're developing across multiple sectors. What are you seeing out there from your perspective?
Well, I prefer to think about it more as what's the cost of project costs rather than construction costs, because I think when you look at the overall project, there are really some key pieces. There's the cost to getting to the point where you can lay your first brick or turn your first sod.
Yep.
That's an investment that you have to make, and it's getting more costly all the time. And part of that's to do with statutory costs. So in the statutory environment, I think we've turned the page forever on governments actually putting money into markets ahead of the need. Australia, unfortunately, has developed a bit of a bad habit of governments coming in late, if at all, and as an alternative, they've come up with some pretty cunning methods to turn developers upside down and shake them for money to pay for things that I think really should have been paid by government.
Yeah, right. So in that same conversation, statutory costs being an increasing barrier for development, and generally we're seeing in our office more DA-approved sites coming to market. They're either not stacking up, and this is across multiple sectors. Do you think that for the multitude of reasons, project costs, that there'll be fewer projects getting out of the ground, therefore there'll be a pressure on stocks, rents, values over the coming years?
I think it's cyclical, isn't it? These things, if you look at them back over in a 20-year horizon, say, they tend to be cyclical. So you get runs of certain kinds of product. For example, at the moment, there's a lot of press about commercial, the work from home effect, the diminution of requirement for traditional office space, all of which is true. But in its stead, I think there's if you want to call it, a new commercial need, and that's about smaller premises that have a little bit more intimacy. It's really about dealing with the quality staff who actually want to come and work in a premises. It's often about the proprietor and the proprietor's own wants and needs. And of course, in the Hunte Valley, we're lucky to have a mosaic of everything from single practitioner businesses right through to multinationals. So I think a developer can actually work their way across the fabric and pick the parts that they are able to develop in. And focus on small market segments. And that's really one of my philosophies, is to try and segment the market, focus on the things that you think you can do well, try not to tell anybody else about them because you don't want competition, and then try and give great satisfaction.
Yeah, absolutely. And looking at another big topic in property across Australia at the moment is housing, the pressure on housing, the affordability crisis that's going on. But looking at it locally, the Hunte Regional Plan has got predicted an extra 100,000 residents by 2041. Under that plan, there's still a requirement for 87,000 new dwellings housing. And there's even further plans for some targets to meet affordability housing as well. So how do you see, from your perspective, those targets being met over the course of the next couple of decades?
I think there's a number of pathways. There's an essential question here. Do we want to live in a place that looks like Western Sydney?
Well, I don't.
Well, I think you'd be 95% of the population. So I think that immediately informs us that we have to be very, very careful about proposals that are driven by densification with very little regard to what community actually will get out of it in the long term.
Yep.
And I think Hunte people are sensible enough to understand that concept. That's not to say we're all going to live on 800 square metre housing blocks or even 550 metre housing blocks going forward. But I don't think we want to be on 250 metre housing blocks in two-storey houses that are jammed up against each other. It's not a pretty outcome, and it doesn't create good culture long term.
Yeah. And look, I've been seeing a lot of commentary from developers around biodiversity impacts and, transition of habitat. So how much of a barrier, obviously the statutory requirements are there, but as you say, it's a balance between wanting to live in a green sort of region as opposed to just throwing together a Western Sydney style model. Have you seen, how do you feel with the biodiversity impacts on some of these greenfield sites that would need to be developed to deliver some of these targets, or even just generally your opinion on that that space?
Well, I think that the biodiversity position needs to be looked at this way, that when we had the hot market that ended about 3 years ago, all the easy sites were developed. What was left over was the stuff at the edge, the stuff in the gully, the stuff on the hill, the stuff with the trees on it. And now we're coming back and we're looking at those, and we are trying to use the need for more housing as the excuse for doing it in a way that we weren't prepared to do it even in a hot market. So you kind of could take a view that the develop at all costs is really just a commercial excuse, and it doesn't have a lot of common sense to it. So what is the common sense? I guess that the themes that play well for politicians are let's densify around railway stations. Sure, we'll give you some more buses and so on, but I think anybody who has a family understands that it's about the shopping centre, it's about the school, it's about the time of travel to get to any of the things that are important to you. Can you get a doctor in your local area? Is there a kindergarten? So there's a very, very complex algorithm in play about what should the urban fabric look like, and it's not just as simple as how do we jam more houses in.
Yep, fair call. Switching back to a sort of the infrastructure discussion that you touched on before, we've got the extension of the M1 going through to Raymond Terrace. That's coming at leaps and bounds. There's other projects like at Jesmond, the bypass there. How important are these projects to unlocking land for housing, industrial, and values even? What have you seen? Like, you've obviously been the beneficiary with some of your sites previously and still are, but as you say, it doesn't come with its extra complexities. How important are these projects to our market?
I think they're fundamental. Unless you have great infrastructure, you'll never have great urbanisation. It's as simple as that. The Hunte Valley, the lower Hunte Valley, is blessed or cursed with its landforms. We've got the Hunte River, statement of the obvious, running through the middle. We've got all the wetlands. When you look at the way settlement has been allowed to develop, there have been certain immovable objects. We've also had the benefit or otherwise of some of the pre-loved mining areas that have provided undermining, and they restrict the kind of development that can go on, or any at all, in certain areas would otherwise look pretty logical. So I think the infrastructure is linkage. Linkage allows you to skip places that you can't build, allows you to get to the next place. So fundamental. One of the great ones, of course, that's in the press at the moment is the very fast train again. From
that Chestnut.
Well, I'm not sure whether it's Brisbane to Sydney that's being emphasised at the moment, or our little bit of Lower Hunter to Sydney. But it's one of the things that I think is really, really important. If we're going to get anywhere, then I think we've got to crack that one.
Yep, great. ESG, it's a big part of major corporate discussion and part of the culture of all the business plans for many major corporates, but it's also coming into small organisations and also into design plans for buildings and statutory requirements, etc. You're a developer, but you're also a chairman of a publicly listed company. How is the ESG part of the business impacting on you as a developer and as chairman of the ASX listed company?
Well, I think that every enterprise should want to do things the right way. So that means behaving responsibly in your environment, in your community, and behaving properly, and people being able to see that you are behaving properly as an organisation. So that's all ESG is. It's not really very complex. Yes, it's flavour of the month. Some would argue that that's a little bit woke, and probably in some aspects, in some ways, it is. But it's an evolution. I think it's a training of organisations to behave in a better, more visible way. I hope it sticks. I think it will. There's going to be some bumps on the way. There's some good argument that some of the compliance costs are unwarranted, and I think any company that's actually doing it properly would probably argue that. But there are a few people and a few organisations around that aren't doing it properly. So, I guess we're trying to catch those people up.
And in terms of building design and even statutory requirements, in the post-COVID environment, there's a flight to quality, office space. There's interest in more modern and sustainable approaches to building design. But in industrial, there's also components of that as well that you're seeing. What can you tell us about some of the components that are coming in industrial space?
Yeah, good question. I guess that when you look at what we build buildings out of today, we probably haven't changed much in 2,000 or 3,000 years. And we're still using a lot of brick and masonry products. Concrete's still very popular, and metals, of course, I don't think are going to go away. I can't see the days when we build a filament building out of some polymer plastic, for example. But who knows? I'm happy to be proven wrong on that. I think that all the trends that are towards better energy usage in buildings are positive, and they should be applauded. But there has to be a balance, and like all things, a transition can only move as quickly as the people it affects move with it. And if the transition gets ahead of those people, then there's casualties.
And as you say, some of the trends, the trend for EV and hybrid work cars, being able to charge it at work and even in the statutory, are you seeing more of that coming into your buildings, whether through statutory requirements or through demand?
Yes. So I think firstly, from a statutory point of view, Newcastle Council is notable. They have DCP requirements for both new commercial and industrial, which are about future fitting for all EVs and providing a certain quotient immediately. Personally, I don't think we'll ever get to the point where 100% of car spaces need to be rigged up for EV charging. But I do think there's a need for some. We have been wasteful in terms of the roofs that we build. And sure, we could get plenty of panels up there, and I think we could take a lot of sting out of the grid. And I think we could change some of the dynamics around the cost of connection of our buildings to mains electricity. So there are some positive things to be had.
Absolutely. And in the news recently, the CBA has announced that they're not looking to lend to fossil fuel companies who don't have an emissions plan in line with the Paris Accord. What do you see as a future for coal? Obviously, we have a market with a lot of exposure to coal, but what do you see as the future for coal and its impact on our market here?
Well, I think coal and the extraction of it in the Hunte Valley, it's really synonymous, isn't it, with the Hunte Valley? I don't personally think we'll ever stop mining coal. What I do think will happen is that it'll be a flight to quality. We'll be mining the better coals for the right purposes, whether it's metallurgical coal or low sulfur coals. So I think a mature market would say, get ready to adapt to less mining of higher value. Also try and look at what the value add could be. So are there any manufactured products that we could get from coal, or are there any transitional parts we could gasify coal, for example, and export the gas? I think that would be a smarter move than just simply jumping on board and saying, here we are now, in 10 years' time there won't be any coal, because I just don't think that's going to happen.
Yep, agreed. And the government has set up initiatives like the Hunte Coast Regional Energy Renewable Zone. We've got talk of offshore wind farms. We've also got a new $880 million solar farm up the valley. how well placed is the Hunter to transition away from coal, in part over the next few years, the next decade?
I think the renewable energy zone concept is great.
Mm.
I think there's 7 or 8 of those zones in New South Wales. So, governments will be governments. I suspect that there's a little bit of the politic in there. But having said that, the Hunter Valley is, I think, particularly blessed because we are full of poles and wires.
Yep.
The leftover piece from downgrading the number and the capacity of our coal-fired power stations is going to be, there's going to be a bunch of electrical infrastructure that's available. And it's not just the poles and wires, it's the avenues they go down, it's the easements. They really are very high value. And I kind of suspect that we'll pull away from some others who don't have those benefits as time goes by.
Yeah, no, I agree. And as we look at alternative industries in our market, emerging industries, we've got established university, an education industry, our health industries, very well established. But especially in recent news, we talk of the new $200 million missile factory up at Williamtown. You yourself, you've been involved with developing 8,000 square metres up in the Williamtown Aerospace Precinct. But focusing on that missile factory and the other cluster of defence industries in that precinct, how important or how much of an opportunity is that for our market to sort of lean into those sorts of alternative or diversified industries?
Well, I think it's strategic. There's really no better adjective for it. We can see that that in the post-globalisation world that we live in today, that there's competitive tension for a number of reasons, some of which is nationalistic, some of it's just simply around resources. Australia is always going to be located where it is, and it's strategically very, very important for the partners that we do defence business with. And within Australia, there are only a certain number of nodes where defence is well established. And it's not just about the geography, it's about the people behind it. Yep. These are high knowledge enterprises. They need people who are trained and who are prepared to stay and live in the areas for them to survive and to grow. And that's, I think, why Kongsberg and the federal government have formed their partnership up at Williamtown.
Yep, agreed. And to ask you to sort of round off the questions, have been very informative. The predictions for the property market for the next 12 to 24 months, even beyond that. And it's a local election year as well. So do you think that's going to have much impact on it? But what are you going to be investing in? What do you think interest rates are doing? Where do you think we're headed? Can you give us a crystal ball? Can you tell us what's going on?
Sure, I'll have a go. I'll have a go, Brent. So I think that first of all, a market is not just a single entity. It's a lot of small parts. So let's try and break a couple of them out. So industrial land, I think that we've seen a run on in the rates. So the $200 block at Beresfield became a $600 block through scarcity. I think it's probably backed off a little bit. It's probably a $550 block now. Why is that important? Well, it's important because we're now going through the land supply phase and to the building production phase. And we have to have building product built. We have to have empty buildings to put people in. And once we see a stability between the rents that can be generated, which have moved, and the land price, then you see more activity going on around building. Yep. Very important for real estate agents.
Absolutely.
If you look to some of the other sectors, commercial, I think commercial has been disrupted. I think one of the biggest activity zones, if you like, within commercial now is ownership. So again, what we're really lucky about in the Hunter Valley is that the product sizes and the values, the implied values, are small enough that a lot of people can play in the game.
Yep.
And you can still buy a commercial suite in Strata for under $1 million, which is not a lot of money in the world of 2024.
Absolutely. And interest rates, do you think that they're coming off, staying stable? Can you predict it? Is it just you just focus on what you're good at doing, or where do you think?
Can anyone predict what interest
Well,
rates
that's what I'm trying to figure out. Yeah.
I think where would we like them to be? Where would all of us like them to be?
Mm.
I think we'd like to see some sting come out, not because of the absolute effect on the cost of money, but even if 0.5% came out, I think the effect would be strong in terms of building confidence in markets.
Yeah.
So that should be what we concentrate on is collectively, I suppose, enduring whatever the pain is that we have to go through to reach the point where the Reserve Bank shows leadership and drops the rates by some amount that allows us to feel better for ourselves and invest back in markets.
Wisely said. Well, we might leave it there. Graham, thank you very much for taking the time to talk with us with all things property in the Hunte. It's been very insightful. Thank you very much.
Been great. I've enjoyed it. Thanks, Brent.
Thanks to our listeners. We'll leave it there, and we'll look forward to catching up with you at the next episode.
Awesome. Thank you.
Cheers.